All right, real quickly, tonight I want to take a brief look at the U.S. dollar euro chart and see if the euro is going to rally against the dollar and just kind of see if we get a sense of where the markets might go in relation um, to the U.S. dollar. This is being brought to you by freechartvideos.com using time-honored techniques to understand modern markets. And this is for educational purposes only. You have to make your own conclusions. Don't take my word for anything. And only you can make the decisions that are appropriate for your financial situation. I'm not a licensed professional, just a guy that draws lines on charts. And here is the chart we're going to be drawing lines on. And right off the bat, I want to tell you what I see in this. There was a small inverse head and shoulders right here that kind of marked the bottom of this channel, which actually goes back to here. So it looks like we've got something of a parallel channel for the last couple of years. And tagged the top here, tagged the bottom, came up, almost tagged the bottom, back to the top, back to the bottom. But you see this inverse head and shoulders pretty clearly, I think. The breakout never really pulled back. Then we had a pullback, and guess what? We had another little inverse head and shoulders in the form of a consolidation pattern, which, by the way, I believe is what the S&P is currently doing, but has done so over a period of 5 months instead of a month and a half, and it's already broken out and started to run. Let's see if maybe anybody's willing to call this an inverse head and shoulders, or as some might say, a cup and handle, this being the cup and this being the handle. So that's a possibility. I think that's something we should definitely keep our eyes on. Certainly the general shape of this is one of weakness, great weakness, lesser weakness, and then a breakout on a nice tall candle. Have not had a pullback yet, and there's no guarantee that you'll get one. But now let's zero in just a little bit tighter, because there's another pattern in here that I think may be significant. And I'm wondering if maybe what we're seeing at this point is a consolidation pattern, perhaps a symmetrical triangle. Let's make that kind of my favorite consolidation colors. The blue, kind of a light blue. Now let's pretend just for a minute. By the way, just so you know, a symmetrical triangle, wherever it forms, has a greater chance of being a continuation than it does being a reversal. It's not a lock, but it has a greater chance of continuing the move that led to it than it does reversing it. So what that means is we probably have about a 60 to 70% chance that prices are going to move out of this area of congestion to the upside. And that means there's about a 30 to maybe 40% chance that it comes down. John McGee likes to say you got about a 2/3 chance of this being a continuation and a 1/3 chance of it being a reversal. At any rate, you have to keep your eye on it so that you can be prepared, whatever the case may be. Now, if we look at this possible head and shoulders pattern, let's fine-tune the lines just a little bit, and we measure the depth of the head. As you've learned, that's what we do to get a feel for how far a pattern's going to go. Then we end up with roughly a pattern that projects a touch on this top line. So again, this is just something you want to know, that this is the general tendency for this kind of a chart to fulfill. That with this pattern, with the depth of this, and now with the breakout over this trend line, and the fact that there are no additional trend lines that can be drawn to show resistance, I think the euro will rally and probably lead the markets, the U.S. markets, higher with it on the weakness of the dollar. So anyway, just thought I'd share this with you. Someone asked to do this, and so I thought I'd jump on in. I don't usually chart anything except for stocks and indexes and ETFs, but I thought I'd give this a go. And when I looked at it, I said, well, that's kind of interesting. Maybe this is what's going on. And if you get a chance, come check out the website, freechartvideos.com, and we have a running S&P update every day, where I go into great detail on what happened during the day on 5-minute, hourly, daily, just every range that you could conceive of, to try to give us some understanding in what's going on in the markets. I use old school techniques because I don't think stochastics and MACD and RSI and all these different oscillators and such, I don't think they're worth a hill of beans. I just draw lines on charts, and it's been working. All of the bearish websites have been saying we're going to crash, we're going to crash, we're going to crash, and they've been saying that for the last 350 positive points in the S&P. All of those 350 points were clear from a chart analysis done over a year ago. So have fun, visit the site, and hope to see you. Well, I'm not going to see you, but I hope you'll check out a video soon. I post these things 1 or 2 a day at the website, freechartvideos.com. Thanks.